Hi, sir. Good afternoon.
हाँ हाँ आवाज आ रही है.
Yes, sir. Properly.
हाँ. Perfect. Thank you, Prince. Thank you for arranging, and thank you, friends. I can see many people have already joined. Should we wait for Aditya? Will he be joining in the beginning or?
Sir, I'll check with him. He said he'll join 10 minutes late, so perhaps in the want of time we can start with our monologue, and meantime I'll check with him.
Sure. So I've got a very short monologue, literally. So I think this opportune time, um, and whatever I'm saying this is purely in my personal capacity, purely my opinion, as always. If this helps you form your thesis or antithesis, then I'll be very happy. If it doesn't help you, maybe some of the questions that participants may be asking may be of some help to you. The only thing that I would like to state or recall in addition to this disclaimer is, if you guys remember one of my tweets last year, there was a quote from Unseen Boss कि तुम मुझे खून दो, मैं तुम्हें वैल्यूएशन दूंगा. तो खून तो बहा है, और मेरा भी खून बहा है, आपका भी खून बहा है, आदित्य भाई का भी खून बहा है. तो खून बहा है तब वैल्यूएशन नीचे आया है. तो ये तो उत्सव बनाने का समय है. इस समय कोई बेरिशनेस या पेसिमिज्म की कोई जगह ही नहीं है. यही तो हम चाह रहे थे, यही तो हमारा स्लोगन था कि तुम खून दो, हम तुम्हें वैल्यूएशन देंगे. अब वैल्यूएशन धरती पे आ रहे हैं, पॉकेट्स में आ रहे हैं इज द कीवर्ड. अक्रॉस द बोर्ड, अक्रॉस द यूनिवर्स नहीं आए हैं अभी भी. सो स्टॉक स्पेसिफिक tantrums will continue. You have to be very cognizant, use your common sense, and try and avoid social media validation as far as possible. I would keep my monologue short and simple for now. And let's dive right into it. I've already responded some of the questions, but in the interest of the time, maybe we can start with the priority that I stated. So any questions specific to Copran, let's take that one first, followed by Natco Pharma and Loris. And then we will continue with the rest. I've already responded to a couple of them.
So,
Prince?
yes, sir. So on Copran, sir, you have already spoken a numerous number of times, and we have talked about the optionalities and the ongoing approvals which were pending basis which, and obviously there were some issues even with the management commentary from last two con calls, if we remember right. So
Correct.
basis that, like how things are panning out business wise, and how if we have to look the business from today's standpoint, how we should take it from there. I mean.
No, so again, I'm a more or less a permanent bull of not a specific stock. I'm a permanent bull of my framework. And I have shared all of this in detail. So I have some 80-90 posts in my um, in on my Substack, but I'll summarize this in a manner such that you will never forget it. So the summary is: any business, any sector, any stock, you only need to check for two rules. Rule one is, what is the forward rate of change? Forward rate of change can be negative. Forward rate of change can be positive. So that is rule one. Rule two is, where is this business in its cycle? Business cycle. So ideal scenario, what I am looking for, if I am looking for a low downside, large upside, which is the anti-fragile trade. Anti-fragility means you can't lose and you can win a lot. So rule one, the business forward rate of change is positive. Rule two is, business is at the bottom of its cycle. Which is, if anyone has read Michael Mobasin's More Than You Know, I think it's chapter 21 or something, there is an S curve. Point A of that S curve. That is the rule two. But that rule is only 20% important. The 80% weightage is for the forward rate of change. And if the forward rate of change is negative, then doesn't matter where the business is in its cycle. Forward rate of change negative means earnings cannot go up next quarter. Earnings cannot go up next year. That is the negative rate of change. And if you invert, as I say, always invert, positive rate of change is earnings are bound to go up next year and the year after, and the business is getting better with every passing year and every passing decade, hopefully. That is a positive forward rate of change. Rule 1, 80% weightage, 70% weightage, majority. Then rule 2 is, where is this business in its cycle? So now coming back to Copran. Copran is at point A in its cycle. And why I say that? Because I have tracked the intestines of this business. Gut bacteria जिसको मैं बोलता हूँ. So I went on their call yesterday. It was a weekend for me, everyone. सुबह 11 बजे की कॉल थी. मेरे यहाँ 5:30 बजा था सुबह का. मैंने अलार्म लगाया था 4:30 बजे का. मुझे उठना है, फ्रेश होना है, मुझे कॉल ज्वाइन करनी है फ्रेश होके. और मैंने वही किया. एंड लकीली आई वाज द फर्स्ट पर्सन इन द क्यू. डिटेल्स आप कॉल में सुनोगे तो आपको पता चल जाएगा. मुझे क्वेश्चंस पता थे, बट मैंने फिर भी वो क्वेश्चंस पूछे जो मुझे पता थे, लेकिन मुझे लगा हो सकता है लोगों को ट्रांसक्रिप्ट पढ़ के थोड़ी अवेयरनेस क्रिएट हो. हेडलाइन इज कि कोपरन बिलो वन टाइम सेल है 2 years forward. On FY27, Copran is below one time sale unless there is a black swan that none of us are aware of. That caveat stands for anything including divis. So barring that black swan event, I repeat, Copran is below one time sale on FY27. अभी मेरे को डिवीज का और सेनोरस फार्मा का किसी का भी वैल्यूएशन देख के ये कोई बोल दे कि ये बिजनेसेस डिसेंट वैल्यूएशंस पे हैं ऑन FY27, तो कोपरन का बिजनेस वीक है, कोपरन का मैनेजमेंट वीक है, लेकिन कोपरन का वैल्यूएशन गटरलैंड में है. देयर इज अ डिफरेंस. लुक एट द डेल्टा कि आई एम बाइंग अ वीकर कंपेयर टू डिवीज. बात कर रहा हूं, सेनोरस नहीं. उसकी बात 2 साल बात करेंगे कि सेनोरस कहाँ है, कोपरन कहाँ है. ठीक है, आज की बात करो. डिवीज इज अ किंग बिजनेस at king plus valuation. There is no denying that. There is no shying away from that. And I know Divi's as much as I know Copran. Compared to Divi's, Copran is in a basement, bunker में कहीं गुफा में है. कब्रिस्तान जिसको मैं बोलता हूँ ना, कब्रिस्तान वैल्यूएशन में है. बिकॉज समय खराब है अभी उसका. तो दैट इज माई टेक ऑन कोपरन इन शॉर्ट. डिटेल थीसिस मैंने अभी समरी थीसिस ऑलरेडी शेयर कर दी है पेड सब्सक्राइबर्स के संग, बट मेजॉरिटी ऑफ द रिटेल नीदर हैज द टाइम नॉर हैज द इंटेंट. सो उसके लिए जितना मैंने कोपरन के लिए बोला है, आई थिंक दैट्स इनफ फॉर यू. व्हेन द ट्रांसक्रिप्ट इज आउट अ वीक और 2 weeks लेटर और व्हेनेवर, you should be able to make up your mind in terms of what you want to do. And doesn't matter where the stock is going in the next 1 month. Absolutely doesn't. The stock will do what it wants to do in the short run. The stock is not the business in the short run. So always with anything that I am saying, please remember that none of this is any sort of opinion on the stock. But all of this is 10,000% opinion on the business. That's my view on Copran. Next one, Prince.
Hi, Aditya. Yeah. Hi, Aditya, sir.
Hi, Prince.
Aditya bhai,
Hi,
hello.
Sajal bhai. How are you?
Ah, good, good. आपने
So, Aditya sir, we were speaking about. Okay, sorry.
हाँ
Yeah,
नहीं
go
नहीं
ahead,
आप
please.
शुरू करो क्योंकि डिस्क्लेमर तो पहले ले ही लो ना हमने तो डिस्क्लेमर दे दिया है
Right. Yeah, Aditya, bhai.
No, no, on the disclaimer side, so as I think most of you know, just to repeat, I am a fund manager at Incred Asset Management. We have positions in many stocks, some of which we may discuss during my dialogue. None of that is a recommendation to buy, sell, or hold those stocks. Please do your own diligence. These are just opinions. They should be just taken as opinions.
Right. So, Aditya bhai, if you happen to cover the business, some aspect Sajal sir has already covered. So, if you want to add to that, otherwise we move on to next question.
Now, let's move on to the next question. I think Kopran Sajal Bhai knows much better than I do. So let's move on.
Right, sir. So, second question is on Natco, sir, wherein like you already highlighted the volatility of the business, and even in our previous communications, we have spoken about it. So, perhaps would like to understand because the majority of the people which I saw the comments even in your tweets also are concerned about. Some are hopeful for the Q1 next year and some kind of that stuff. So would appreciate if you both had how you are viewing the current situation and going forward, please.
no so I can maybe start first and then Aditya has got very consistent and very clear view on Natco permanently. So definitely we would like to hear his fresh view on how he sees Natco. But before I give any opinion on Natco, let me put a disclaimer out first that I re-entered Natco on Friday at around $880, and I disclosed that in a short note to my paid subscribers. But I'll summarize it here. I won't be able to share the full thesis, but I'll summarize the key points. So the key point is, if I look at on a FY26 basis, that is next year, 1 year out, give or take, Natco Pharma is at 10,000 crore market cap adjusted for cash. Point number one. Point number two, end of FY26, 90% rev limit, give or take, is gone. So let's assume rev limit goes to zero. Starting of FY27, end of FY26, rev limit goes to zero. Semaglutide is zero. So there is a carnage, there is a bloodbath, and no one makes money in semaglutide in the emerging market ex-US. That is the scenario that I am talking about. That no Revlimid, no semaglutide, Natco at 10,000 crore market cap with Rajiv Nanapaneni type TCE grade management is a no-brainer, period. That is my broad brush thesis on Natco with that clear disclaimer. Aditya, please.
Yeah, so this is one stock I think, or one of the very few stocks where me and Sajal Bhai always have very different opinions. And again, my call is not on the stock, my call is on the business. The way the US business is and the way the promoter or the management runs this business, both essentially involve very, very high level of lumpiness in earnings because they go after these high quality, high ticket uh, exclusivity products. In the previous era, it was Copaxone, which is still running as a very, very large contributor to their profits. Then it was Revlimid, and then, in future it might be semaglutide, maybe some other uh, products where they might have some sort of a limited competition window or some sort of a semi-exclusivity or sole exclusivity. What that does is essentially for shareholders, it creates a huge amount of volatility in earnings. So one quarter, it might be 600 crores of PAT. The next quarter or the next year, the same quarter might be 200 crores of PAT. So the issue that I have with businesses like that generally is that because the street doesn't understand the business that well, the stock prices keep fluctuating. So Natco, when they got Copaxone approval, touched $1,000. Then as Copaxone got monetized, the stock I think went to 11, 1200. And then as Copaxone started getting some competition from Sandoz, other companies, the stock came down to 700, 600. Then when Revlimid came in, again it went back to 14, 1500. And now that Revlimid is dying off, again it's coming back to 7, 800. So I don't disagree with the cash flow that the business is making. The business is making amazing cash flow, and if properly used, can generate a lot of value for shareholders over a longer period of time. But for me to hold stocks or to buy or exit or enter or exit stocks at which has such high volatility becomes a challenge. So in our at the Incred Healthcare PMS, we have never bought, never owned Natco, and I would refrain from owning that unless the stock comes at a valuation where there is very little to lose or the margin of safety is very, very high, which I think may happen in the coming month. The stock may touch a price point where we get extremely comfortable with the valuations.
And one question is on the cash on books. So basis that some QIP and that cash on books is acquisition by Netco is something which can be possible, or maybe the question is not relevant. I received over email.
Uh, I actually get Sajal Bhai's point that Rajesh Nanapene being a good asset allocator potentially will use this cash flow wisely. The difficulty there really is that that cash, the way he has used his past cash. So when he made cash from Copaxone, he started the agri-chemical business, and as you can see, he's playing a 10, 12, 15-year game, right? When he's starting agri-chemicals, Rajiv Nanapaneni, even when he started the business, was very candid that the business will not generate profit from year one or year two. It will take time. Because it's a sort of a business that scales up over a period of time and then, starts seeing some profits. Um, if he does something similar with the cash flows that he has earned from Revlimid, again, in the next 3, 4, 5, 2 years, the business that he may acquire or may sort of incubate may not give him near-term profits. And when I say near-term, I'm referring to 2, 3 years, not 5, 10 years. 5, 10 years, those businesses might become profitable. Um, but my job as a fund manager is to probably try to get the timing a little more correct. We do have patience, but we generally avoid, taking calls which are 10 years out. We are more about calls which are 3 to 5 years out. So that's the difference, I think, in the approach of me and Sajal, by looking at the same stock. While we agree that the management quality is good and the cash that has been earned from Revlimid will be used for good reasons, I think the time horizon makes the call different.
Right,
Yeah,
Aditya.
and just to add, mid-April when I start my Substack, I have Natco's research report ready with me. I only needed to fill in the numbers there because and that thesis was ready even in August last year when I was bearish publicly. So I have got full report ready with me and I'll do the presentation, audio or whatever I do. So people who are subscribers there, they know operating mode. Sometimes I am in audio mode, sometimes I am in video mode, presentation mode, sometimes I am in text mode, and there is nothing cryptic there. So hang in there. There will not be any post between now and mid-April on Substack because I paused it. That means pause, no action. But as I start on 15th of or early April rather, not 15th, I will be all guns blazing again with all the pent up reports. So use this time, guys, to go through all these 80-90 posts that I have created. You have plenty of time to catch up. I know I've been running faster than probably some of you could manage. This is your time to go through, revise and everything. I will share the detailed report on Natco, which will include the chemical business outlook for FY27. So I'm not talking about 5 years here. FY27 chemical, FY27 domestic branded, FY27 ROW ex US business, everything ex US, and my detailed analysis on where I see this business over 5 years. I'm not even talking about 10 years now that the valuations are where they are. And again, I could be wrong, anyone could be wrong, but that's my Simple thesis or view on Natco. I think we can move on to the next one.
Right, sir. So although it is related to copper, and let's quickly ask and then we move on to. So it's basically asking about the with the Chinese selling penems at much lower cost than copper. And do you see company will be able to move ahead and show growth? And if so, what can be unfolding during next 3 years, 2 3 years period?
See, so this is not the forum to share the cash flow analysis and the outlook on Copran for next 2 3 years. I've given my summary view, which is Copran is below one time sale on FY27. Now the nuances and the details, the first right is owned by my paid subscribers for that, because I'm responsible to them now. So they own the first right to see the details. I've given them a summary note already, just after the call ended yesterday. So I will hold my thoughts on that question for now.
Right, sir. Noted. So one question before coming to next business is on the tariffs news which is coming from the US. So how much impact it can have and how you weigh its gravity? I mean, going forward, or there is nothing new. These kind of situations were earlier also. So nothing substantial if our horizon is long. I mean, how you read it?
Yeah. So again, randomness. I love it. I love the unpredictability in so chaos and disorder. I thrive because I have I have read Nassim Taleb for 8, 9, 10 times, probably in that order. So I knew this is happening, and I can tell you with 100%, 1000% conviction that this will get worse. It may not get worse next month or next year. The chaos and disorder will only increase in the world. In general, I'm talking about. So the fragile will ultimately die in chaos and disorder. It's only the anti-fragile management that is. Business can be fragile today. So there is no such thing as a permanent station that once the business is fragile, it will permanently be fragile. I'm looking at the management. If the management is anti-fragile, that management will become stronger amid this unfolding volatility and disorder and chaos, because time, I keep repeating this, time is the single biggest member of the disorder family. You give time to an anti-fragile management, and when that management turns around and turns their anti-fragility mode, तो पानी नहीं मांग पाओगे मिस्टर बेयर. That's all. Aditya, please.
I didn't understand the question completely, Prince. Could you repeat the question?
So Aditya, recently the US tariff thing, has it any consequences on the say healthcare and pharma space? And if it does, what is the gravity in your view that the impact would be?
हाँ ये बहुत इंटरेस्टिंग है and I'll switch to English here a little. Again, just opinions. First of all, at Incred, we don't invest in US generic businesses because we don't like the volatility, the cash flows, see because of the nature of the business. And obviously, we believe that the ROE of the business is extremely low compared to the branded businesses that we generally invest in. So that's one. Secondly, there is a reason why US imports generics from countries like India. The reason is that the cost of manufacturing the same tablet or the same syrup in India versus US, the differential is about 40-50% in cost. So in India, if you manufacture the tablet for 100 rupees, the onshore manufacturing for US will cost about 150 rupees. And that extra 50 rupees will have to come out of the wallet of the American citizens or the American insurance companies, or both in part, or the federal government for the uh, uh, insured patients from the federal government. Um, so, if Trump decides to impose tariffs on US generics, uh, my guess would be that the entire tariff would need to be passed on by every generic manufacturer. Remember, they on an average, excluding one-time product opportunities, these generic manufacturers make 2 to 5% ROE on their businesses in the US. So, they don't really have scope to take more hits, if you ask me. So if Trump, let's say, exposes 10% tariff or 20% tariff, on these generic products, the generic manufacturers today have basically no choice but to pass it on to the customer and increase their selling prices, which eventually will have to be borne by, the patients there. Mind you, despite a 20% tariff, Indian products will be cheaper than the onshore manufacturing capacity in US. So look, when you're looking to choose a destination from where your product needs to come, there needs to be three C's: cost, capability, capacity. I am willing to argue today that onshore generic manufacturers in US neither have the cost, nor the capacity, nor the capability to manufacture the products that Indian pharma companies are manufacturing and selling to them. The only reason why Indian pharma companies don't make enough ROE in that market is simply via demand supply economics, where, there is oversupply for the American market. There is a beeline of Indian manufacturers willing to sell their products in the US generic market, and because of which pricing is suppressed, will probably remain suppressed because oversupply doesn't really go away that easily. It takes time to come down to demand. But yeah, so in short, I don't see the tariffs being applied because then the price inflation in US will be very high. If it gets applied, then they will have to face the music in terms of price inflation. But the pharma companies will not benefit either ways. So if it doesn't get applied, current business continues as usual, which is anyways not a great business to be in. If it gets applied, they will just pass it on to the consumers. That's how I see it.
And just to add to what Aditya said, I've not interacted with any of the US generics companies, but I've interacted with a lot of companies that I track. And purely on this point, I asked this question to many of these managements and key opinion leaders. And the headline response that I got was that before President, Trump is a businessman. He understands economics. So now you can extrapolate and calculate.
I think there was a comment from Mr. Dilip Sangvi last night or today morning.
Mm-hmm.
He said exactly the same thing. He said that
Huh,
if there is duty imposed, the consumer will have to bear the duty. We don't have the margin in this book to bear
absolutely.
it. So
Huh.
बहुत clear है.
And inflation is already high, Aditya. So
Exactly.
this will become worse for US.
Absolutely. From that lens, सजल भाई, ये जो entire ट्रम्प का जो tariff tantrum है, I think 5 years down the road this will be referred to as tariff tantrums. I think these are more arm twisting tactics. Basically, he's trying to save the US dollar one way or the other, and he's trying to save some balance sheet deficit of the US. तो ये arm twisting है,
Yeah,
ये
and this
posturing है.
exactly.
They
Huh.
really strike deals. So when Prime Minister Modi was there in United States recently, they signed a deal to buy some, I think these F-35 jets from US, right? अभी वो हो
Hmm.
गया deal sign, defense deal sign हो गया between multi-billion-dollar deal between India and US. Now these tariff stories will die off. I don't think these are coming.
Exactly.
Basically, this is President Trump trying to do business. That's about it.
Exactly. And if you are an investor who gets influenced by every news flow, then your life will become hell. That I can guarantee you. Because then you are in fragile mode always. Every news, oh US FDA, अभी ऑब्जर्वेशन आ गया, अभी क्या करना है, अभी ये न्यूज आ गया, अभी ये क्या करना है, मिस्टर XYZ has tweeted this, what should I do next? You are in a permanent state of fragility. That's why the only thing that you could do is either you invest through mutual funds, or my sense is you don't need to go to any mutual fund, you just do an SIP. If the stock is half, your buying power of your money is doubled. Simple. You know the image that I posted last night yesterday. If the stock is down, your buying power is 2x. So keep SIP on a monthly basis. And if the market is really hot, and you can only invest 100 rupees per month, maybe invest 30 rupees, 40 rupees, never stop SIP. And then what you are doing with the other 60? So let's say you are an SIP investor who's doing 15 hours job. The other question that I get is, I'm a working individual, I don't have time. So I take the scenario where you are in L&T and you are working 15 hours a day. So you don't have any time. You go home, you sleep, you eat, you sleep. I'll give you a very simple formula. You are in June, July last year. market was really hot. Your normal SIP allocation is 100 rupees. In that kind of a market, you invest 30 rupees only. You never stop SIP, so you will never do zero, even if market doubles. So market could have doubled in July from those levels. Even in that scenario, you will never stop SIP. You will never go to zero. You may reduce it from 30 to 20 or whatever, but you'll never go to 0.1. Then what you do with the amount that is your SIP budget, but you are not deploying it today. So 70 rupees or 80 rupees out of that 100. What do you do with that? You put it in a instrument like your savings banks idly or wherever, or a short term FD that you can break, a blink of an eye. And in this kind of a scenario, current scenario, you use all of that saving out of that pot, 70 or 80, what you have been saving period by period, which you were not investing because you were not full throttle. Now this is the time to offload in barrels, and market may not recover tomorrow just because you have deployed all your savings or the extra SIP money that you were not using last year. That doesn't mean that market will reverse tomorrow. What do you do in that scenario? You continue, you don't predict, you don't even read any newspaper, you haven't got time to read. You're working 15 hours a day. So you keep doing this 100 now. Assuming you can't go over 100, you continue with that 100 and dollar cost averaging. The stock keeps falling, your buying power of your money keeps increasing. This is a simple formula. If you can't even follow that, then I'm not too sure how can you do your job.
Right, sir. So next question is, sir, interesting in the sense like some companies with good results are resilient, and there are some companies with pretty well and maybe above expected result, and despite that, although the market as a whole is taking a beating, so no different for those companies, but just to understand on this context.
Anything, I got the question. So several factors. Number one is the sentiment. See, stock will do what the collective wisdom of market is thinking. If the collective wisdom of market is thinking that the future is exceptional, then the stock will not fall, or stock will fall less. And then again, this sentiment, they change on a daily basis. Tomorrow some news may come and that same stock may be down 10% for that random reason. So that's why I keep saying that this randomness, chaos and disorder will keep increasing. And stock and business are completely disconnected over short period of time, but they are never disconnected over longer period of time. Aditya?
Yeah, I think generally मैंने जो notice किया market में, I think थोड़ा सा difference of opinion है from whoever asked that question. I think where results are expected to be good and results have been better than good, stocks haven't really fallen that much. I mean, with the market, obviously 7-8-10% तो गिरा होगा, but more than that, they haven't. I think the real pain in today's scenario are being caused by stocks which are 40, 50, 60% down from where they were, let's say, 6 months ago. And I think in those stocks, the multiples were so high 6 months back, and hence the implied growth in earnings was so high, the implied growth in cash flow was so high that it was just practically impossible for these companies to meet those expectations, or they just did not meet those expectations even if it were possible. So hence those stocks have taken a severe beating. So I have examples like Muthoot Capital, I have examples like Amara Raja Batteries, I have examples like all the defense and railway stocks, stocks that have taken a severe beating simply because people thought that earnings would compound at 30% per annum from this year onwards. Uh, and that is what was being implied by the multiple that these stocks were trading at. So वो correction तो होना जरूरी था, and that has happened, and it may continue still because अभी भी I don't think many of those stocks have normalized. They are still slightly elevated. So I think जहाँ पे earning का expectation कम था और earning अच्छा आया है, those stocks actually haven't fallen much. Case in point, HCG, Healthcare Global. Case in point, something like a Vimta Labs. Case in point, there are a few stocks that I own, Hindustan Unilever. So those stocks I don't think really have fallen significantly from the peak, simply because earning का expectation भी कम था और decent growth आया है. So it is all about margin of safety. It's all about your entry price. So if your entry price was right, if your multiple was right, then I don't think there has been much pain caused yet in the system.
So, Aditya, last quarter when we have spoken, obviously the diagnostic select pocket within the diagnostic were at very good valuations, and basis the market sentiment, I believe earnings have bettered, and the price has corrected in sync with the market, if not more. So perhaps the lucrativeness of the segment appears to be more. So do you think that understanding is right, or there is some exception to that?
There are a couple of exceptions. For instance, Thyrocare ka stock, despite so Thyrocare, by the way, this quarter, just a number they reported 14% volume growth, 14% YOY. I don't recall another business. Very few businesses in India in this quarter would have done 14% volume growth, right? But the stock is down like what 20-30% from the peak, uh, because they announced an ESOP plan. But again, that ESOP plan is not for Thyrocare shares, it's for API holding shares. So it doesn't impact Thyrocare shareholders other than just being a debit on the P&L. It doesn't impact cash flow, it doesn't impact share count, it doesn't impact anything. Uh, so that stock is still down. But Dr. Lal or Metropolis, they're down because the numbers were not that good as were broadly being expected. And this cut their estimates for these stocks after the results were announced. Uh, so each stock has been unique even within the diagnostic space, Prince. So Krishna, the top line growth was lower than what people were expecting, although the EBITDA growth was similar. Again, because they had some challenges in a couple of tenders that they're trying to execute, but they're saying the challenges will get overcome next quarter. So we'll see how the next quarter pans out. But nonetheless, so my point is that even within the diagnostic space, it has not been a very sort of homogeneous quarter. But stocks have fallen where they've they've fallen short of expectations. And in a Thyrocare specific case, they have announced an ESOP plan which will reduce reported PAT, not impact cash flow, not impact EBITDA, but will reduce reported PAT because the management is getting an ESOP of the parent company which is not listed.
Aditya, I've got one question for you on diagnostic space.
Yeah.
Why is Vijaya Diagnostic head and shoulders above any of the other listed players?
Mm-hmm.
And when I say head and shoulders above, I'm not talking about the valuations.
Mm-hmm.
I'm talking about things like working capital
Yeah.
and those kind of metrics.
Yeah.
Why is Vijaya Diagnostic so beautiful?
Right. Still, by regional players on financial metrics will look better than pan-India players. It's just about the economics in a region. Okay, uh, so let me give you examples. Indraprastha Apollo hospitals, right? Which is a Delhi-based single-unit hospital. Look at the numbers, right? Look at their EBITDA margins, look at their ROE, look at their cash flow. Everything is better than an Apollo or an SCG or a Max Healthcare or a Fortis, right? But that's because we are a standalone unit. You don't have several overhead expenses. You don't have several, expenses that come along as a part of being a chain, right? So your unit economics will always look better. Unit economics for these larger chains are also very, very good. But what we get to see is not the unit economics. We get to see the unit economics minus the corporate overhead, minus the expansion plans, minus. So there are multiple other line items that appear when you become a chain. So why still prefer chains? Because chains have scalability. Single units for regional players lack scalability. I think that is where Vijaya will get caught. The numbers look great. They are still a regional player. The moment they want to move out of that region, they want to expand to other parts of India. I think that is when you will start seeing these numbers that you see, the negative working capital, the margins, the ROEs. You will see them suffering a lot the moment they expand beyond that region. And they will have to at some point expand beyond that region because within a particular region, beyond a particular scale, you just cannot operate. So you have to move beyond the region. I hope that helps.
हाँ हाँ बिल्कुल। और ये जो आप दिल खोल के नॉलेज शेयर करते हो ना आदित्य भाई, इससे जो दुआ मिलेगी ना आपको इतनी कंपाउंड होगी। मुझे यही आपकी बात अच्छी लगती है। वन ऑफ दोज रेयर फंड मैनेजर्स, लेट मी पुट दिस ऑन record, who is never shying away from sharing knowledge with retail, and we all love you for that. Thank you.
So kind of you, Sajal. So kind of you. Thank you.
Totally agree on that, sir. So moving on to next question, sir. Question is, what is the difference between with the CDMO offered by Heikel versus Piramal, and why would an innovator choose one CDMO over the other? Is it only cost, or there are differences in competencies, technologies, etc.? Although we have discussed many times, but in case you wish to take, sir.
No, yeah. So in summary, no two CDMOs are same. What Piramal has capability wise, Heikel hasn't, and vice versa. So Piramal is the champion in the ADC space. I see, every Tom, Dick and Harry today are talking about ADC as a competence. I can tell you that Piramal is the only company that does end-to-end ADC at scale, and that has been doing it for ages. They never had this A of ADC, the antibody, which is what they fixed with the Japan Bio. But the payload and the linker and the conjugation, they've been the masters. They are the pioneers. So there is no match. If I'm looking for an ADC project, Piramal Pharma is my go-to. Simple. No other player has got the learning curve, as I call it, the experience curve or the economics of learning, because no other player has done it longer than Piramal. And the number of projects, the complexity, variety. So Piramal is my number one in ADC. Dishman Carbogen is number two. So that's it. That's for ADC. So what these guys can do, none of the other, including divis, none of the other, including divis, can do. So again, depends on, what is your requirement. If you're looking for a high volume, high complexity, so 20 step synthesis and 50 tons, you will not come to Piramal in that case. You will go to divis, because you want both the volume and the complexity, and volume takes priority over complexity in this case. And there are only two players in India who will deliver that kind of a Chinese level matching volumes, Loras and Divis. There is no third player. So that is the answer. So, but Heikel has got a specific capability. Heikel is cutting across animal, crop, and human pharma, and their business model today is very different compared to what it was, let's say 4, 5, 6 years back. They used to be a generic CDMO
Correct.
company then. They have got double digit NCE projects today. वो नंबर में नहीं दिख रहा है, नंबर में जिस दिन दिखेगा तो भाव भी वहीं पे दिखेगा, उस दिन मैं यही को चलाऊंगा, ये वाला जो सेक्शन है.
I agree. I agree
आदित्य.
completely. In fact, Heikel ने बोला भी था, if I'm not wrong, 75% of their crop protection business is CDMO. And obviously the novel, contracts with veterinary companies and novel contracts on the pharma side also that they're getting. I think they've just been, sort of victims of a series of accidents. पहले वो pollution वाला accident हुआ where the company has been given a clean chit. Then the promoters kind of, entered into a shareholding battle, but that doesn't impact the operating performance of the company. And then lastly, now the crop protection business has gone through a very ugly down cycle, which has happened for all agri companies, including Heikel. So I think a series of accidents over the past 3-4 years sort of have kept the stock under radar, or the business under radar of many analysts and fund managers alike. Uh, but when it's a Lollapalooza, it's a perfect Lollapalooza. So when things turn around, I bet that each of these things will start falling in place one after the other, and then the stock will just have no. Hopefully, the stock will do very, very well. Again, guys, disclaimer: I hold Heikel in my PMS, so I'm biased. So you should do your own homework and consult your advisor. Having said that, again, I'll give you an example. Lupin, 3 years back, Lupin's stock price was $600. The world seemed to be ending. They were getting FDA alerts across all their plants. Their domestic business itself was probably worth 1,000 rupees a share,
हाँ.
and the stock was at 600 rupees a share, right? And that's the time when, I came out and I said, look, in the US generic space, we hold only Lupin, because only that's the stock where we thought the price was justifiable to enter. And then, one after the other, the plants got cleared. They launched their inhaler products. The India business sort of gathered momentum. The API sales picked up. And today the stock is at 2,100 in 3 years' time. So, when you buy stocks which are in perfect, or businesses which are amidst perfect storms, it may test your patience, but, once the storm subsides, the rewards are just too good. In my experience, I mean, that's just sharing my experience here.
Next question is on the, okay, let me, 1 second. Yeah, sir, what's your understanding about
Know
Windlass
your view on
Biotech?
this scenario here. Antifragile business has got a clear characteristic that it will hide qualities. Always. If a business is hiding qualities and exposing defects, it's antifragile. What are the defects? Defects are US FDA risk, challenge, uh, negative perception, NGT, this issue, pollution problem, ye problem, wo problem, problem ही problem. So it is exposing all the, it is showing all the weaknesses. What is not showing is all the qualities, and that is the majority. Heikel is hiding all the qualities. It's exposing all the weaknesses. Now promoter, take a hypothetical example that someone like a KKR on an 8 roads or True North meets Baba Kalyani. Again, this is an opinion, very critical, right? But hear me out. Baba Kalyani has got, let's say, 34% stake. KKR or True North says, you give half of that to me and you take X amount of cash because I know your business and you know your business, but I know better than you. So for your 16 or 17% or 50% of your 34%, I will give you enough cash to make you feel very happy, which you otherwise will not get. And the remaining half, 50%, goes to the Hayarmat family. You settle your case. So now Hayarmat become the controlling promoter with over 50%, and they have got KKR stroke a competent partner. स्टॉक लेके दिखा देना ये सिनेरियो में.
Yeah, I've got another. I've
बताइए
got
आदित्य भाई
another. I've
कैसा
got
लगा.
another alternate viewpoint here. Baba
हाँ
Kalyani family owns Bharat Forge. Go and check the market
हाँ
cap of Bharat Forge and Kalyani's stake in Bharat Forge. Imagine the wealth that they're sitting on.
हाँ
Why should they be fighting for a
हाँ
Heikel asset?
एग्जैक्टली.
कुछ तो बात मतलब they are seeing something, right? तो मेरा
हाँ
simple point है.
खुद ब्लीड कर
हाँ,
रहे हैं एंड दे आर ऑल्सो ब्लीडिंग.
yeah, exactly. They're bleeding there as well. So why would they hold on? I mean, if I were Baba Kalyani in my right mind, I would say I have a Bharat Forge, take my stake in Heikel, give me some cash, let me sort of, try to do something with my Bharat Forge business. Maybe launch another vertical or another line, right? Why am I even bothered about Heikel? Maybe I know something about the business which tells me that this can be big. I mean, that's how one might read it. I'm just presenting a viewpoint here. So other than what we know of Heikel, at least I believe they have a lot of capabilities, a lot of cost advantages, a very, very long-term customer relationships, all of which are positive ticks in the business in which they are in. But the fact that a giant like a Baba Kalyani group is, still interested in fighting for the number of shares that they have in Heikel, I think that tells me that there is something more than meets the eye. As Sajal Bhai said, anti-fragile.
नेक्स्ट वन. कितना टाइम यार. आज मैं लिमिटेड हूँ 1 घंटे में, बट आई कैन डू लॉन्गर सेशन
Sir,
टुमारो.
time
बट लेट्स
आप दोनों की
क्वेश्चंस.
availability के हिसाब से. Yeah. So one question is on the chemical side. So basis these 2 quarter correction, which chemicals you believe has been impacted much by the China? And the second part of the question is which are the companies which, despite competition from China, has shown anti-fragility? I mean, names are not important, but maybe broadly for the chemical sector, sir.
हाँ तो where China operates in high volume fermentation as an example. So amoxicillin अगर बनाना है आपको, KSM fermentation back end वाला, वहाँ उन chemicals में China is strong, right? And China is strong in basically bulk and commodity. Anything to do with bulk and commodity, China is strong. What is China's weakness in chemicals or chemistry? It's the complexity. Indian chemistry skills are ahead of China. We have got great chemists in the country, excellent scientists, resource pool. In China can never compete with someone like a Newland Labs. China can never compete with someone like a DV's, or even Laurus for that matter, on the GMP chemical side. And likewise, China cannot compete with a Clean Science as an example. The moated businesses in the chemical space that have got a strong IP and technology. China can never compete. फेल होगा वो, रोज ही पिटेगा. China is powerful in large volume, commoditized product. The game is PAP, PAP, वो पैरामीनो जो इसका N-1 है पैरासिटामोल का, KSM basically, या आइबुप्रोफेन के KSM, या ये आपका आजकल बड़ी इसकी जगराता चल रहा है ना, ये GLP-1 सेमाग्लूटाइड. अभी देखो अभी चाइना इतना मारेगा ना सेमाग्लूटाइड में, वो खाल खींच लेगा. They've got capacities. But again, in their peptide capacity will not be able to match Newland Labs. Why is that? Because there are 50 shades of peptides. China cannot fight with select niche Indian players. That is the nuance. That headline will not tell you. So, if you are worried about China, commodity chemicals, large volume chemicals, those are the pockets you got to be very careful about, both from near term China risk as well as longer term obsolescence. So amines का केस देख लो ना, कितना इसको प्रमोट किया जा रहा था 2021 में, the amines duo. अभी यार मोट ही नहीं है बिजनेस, नहीं कर सकते हो बीइंग अ साइंस कंपनी. तो उनको अवॉइड करो. You open the annual report, you see if this company has been doing R&D or not, and which areas the company is doing R&D. The promoter knows 10 times more than you guys or me. But if they are not doing R&D, that means they are slipping into this land of fragility, slowly but surely. Aditya, anything?
नहीं, आई थिंक परफेक्टली करेक्ट. चाइना से वल्नरेबिलिटी जहां है वो बल्क केमिकल्स में है, बल्क एपीआईज में भी है. बट व्हेन इट कम्स टू हाईली कॉम्प्लेक्स लो वॉल्यूम हाई वैल्यू प्रोडक्ट्स, चाइना का कैपेबिलिटी बहुत रिस्ट्रिक्टेड है. हाँ, ग्लूटाइड्स में चाइना हैज बिल्ट अ लॉट ऑफ कैपेसिटी. इट्स अ मास वॉल्यूम प्रोडक्ट. आई स्ट्रांगली बिलीव कि ग्लूटाइड में ज्यादा पैसा नहीं बनेगा. But in your peptides, there are obviously multiple variations of the peptides. So जो niche peptides होंगे वहाँ definitely पैसा बनना चाहिए for Indian pharma companies. So yeah, I mean China से अगर खेलना है तो उसके टर्फ पे नहीं खेल सकते. You have to play on your turf. You cannot play the same game as
Exactly.
them and beat them.
Exactly. I mean, I'm just, because we are discussing this glutide ना, अभी 15,000 crore का market cap पे आप वन सोर्स और मेरे से लोग पूछ रहे हैं कि क्या व्यू है. अभी मैं क्या व्यू दूं यार? वो 100 साइंटिस्ट हैं उनके पास, 100 साइंटिस्ट, 15,000 crore market cap and so much fragility. It is just waiting to flood. There can be a bloodbath. Probably there will be a bloodbath in semaglutide. I mean, how will you survive in that kind of a scenario with 100 scientists or 200? वेबसाइट देखा ना वन सोर्स का, लिखा तो है 100 साइंटिस्ट हैं.
This is the same com.
तो क्यों ऐसी जगह 15,000 crore का मार्केट कैप?
This is the same company which also developed injectable capacity and then sold it to someone else because they were not able to scale it up, right? The same group, if not the same company. Huh.
हाँ, थोड़ा कॉमन सेंस लगाओ गाइस यार.
See, I'll tell you how to. So I'll take 1 minute here. I'll tell you how to think like a investor. Okay, ये narratives में फंसना सबसे easy काम है. Sorry, Prince, do we have 5 minutes? It will be a monologue for 5 minutes, but I want to talk about this.
All the time,
हाँ,
sir. All
I
the
want to
time.
talk
Please
about
go
this
ahead.
because a lot of retail investors को थैला पकड़ा के भाग जाते हैं लोग. Let me sort of explain this to you. There are a lot of these narratives around peptides, glutides, insulin, ye, wo, and the other biosimilars. Look, narratives don't make you money. What makes you money is the cash flow, right? And your entry price. That is very, very critical. So I just wish and I hope that each of us, including myself, may be guilty, each of us work 10 times harder on our entry point than we work on the future potential of the business. Future potential, हर promoter आके, हर management आके यही बोलता है he is going to get the sun and the moon. Okay. But अगर आपका entry price में वो sun and moon already discounted है, then the problem is that if the promoter fails to get the sun and the moon, you lose dramatic amount of capital. Okay. Dramatic amounts. 60-70% drawdown easy है. अगर you buy it at the wrong price and then the promoter fails to deliver or the management fails to deliver, right? I'll give you a classic example. I cannot name this stock, so excuse me for that. But this stock has a NCE product which they are saying will be launched, and they are saying this NCE product has the potential to reach $2 to $5 billion in global sales. Can you imagine? $2 to $5 billion. I think the market cap of this company currently is around 25,000 crores. And they are saying they can make like $3 billion, which is 25,000 crores out of that one product in top line with very high margins, 50-60% kind of an EBITDA margin, right? And this company came to us and they said, we want to do a QIP before this product is approved by the US FDA and other regulatory agencies because we want to pay down debt. So they're diluting 10%, they were diluting 10% equity and they were saying we want to pay down debt and we want to, so out of 2,000 crores that they were raising, they wanted 1,000 crores to pay down debt and 1,000 crores to build biosimilar manufacturing capacity. So in that meeting, I asked them just one question. I said that when you believe your profit can grow 8 folds to 10 folds in the next 3 years, why are you diluting equity? You should be taking debt. Why are you repaying debt? Right? You should be buying back equity when your profit is about to grow 8-fold in 3 years. There was a 10-minute awkward silence. The management did not have a response. उन्होंने सोचा ही नहीं था कि कोई ये क्वेश्चन पूछ लेगा उनसे. वो अपना कहानी रट के आए थे कि हाउ दैट multi-billion dollar product will change their lives and the lives of their investors. But when you quiz them on why you're diluting equity right before such an exciting event, just think like a common investor. यार ज्यादा complicated नहीं है. Right? Now, for all you know, they have diluted equity. Obviously, many individual and fund houses have put money in that QIP. Now, for all you know, the drug might get approved and they might make multi-billion dollars out of that drug and the stock might double, treble from here, right? But the fact that the promoter diluted right before the event tells me that he's kind of trying to hedge. He himself doesn't believe that there is a very high chance or there is a 100% chance of approval. So he's hedging. He's saying, let me pay down my debt. So in case this product doesn't come through, my company doesn't go under. So my debt is not there. So I will be able to survive. That is how I look at it. I may be wrong, but I will not lose capital if the product doesn't get approved. Whereas the guys who put in money in this QIP, including retail investors and fund houses, they will lose money in case this product doesn't get US FDA approval or doesn't turn out to be a multi-billion dollar product even if it is approved. Right? So, thoda sa, matlab, I think we should, as investors, we all should work really, really hard on our entry points and margin of safety while evaluating such, narratives and rhetorics. Sorry for the monologue, but this is a pain point which I just wanted to talk about.
No, thank you. Brilliant point, Aditya. And guys, I'm pressed for time today. You guys continue as long as you can, but I will definitely be back 8:30 India time tomorrow, and then I'll have more time for sure. So I've got more time tomorrow, but I'm really pressed hard for today. But I'll be back tomorrow, and if necessary, if needed, I'll have another session on Tuesday. I will not leave any questions unanswered. Thank you. That's my promise. God bless. Thank you.
Thank you,
And
Sajal.
stay bullish, please. Bye bye. Bye.
Thank you, Sajal sir. So Aditya bhai, बहुत ज़्यादा time नहीं लेंगे, but if you would like to take your view, share your view on the earnings for this quarter, whatever universe you track or broadly segment wise, that would be helpful for our audience. And if there would be subsequent question and time allows, I'll take
Sure,
those with
I'll
you.
just quickly do that. Earnings so far, obviously the quarter is still ongoing, but so far, whatever earnings I saw, I think by far the worst earnings came in the MFI space, MFI/NBFC space. Uh, but that space in terms of valuation seems to be bottoming out to me. So as a fund manager, I've started investing or allocating more capital into the MFI NBFC space. No doubt the next 1 or 2 quarters may remain challenging. And if the stocks go further south, I may decide to size up some of these positions. Uh, Simply because I feel the margin of safety at the current price is pretty good. It can always get better, but if it gets better, I will size up my positions even further. I think the MFI NBFC space is absolutely critical for India as the economy, and as if we want to grow as a world power, if we want to grow our nominal GDP at 10-12%, we just definitely need the MFI NBFC space to fire. Um, Again, this is a space which has been in a perfect storm, both in terms of regulations, in terms of AUM growth, in terms of the ability to lend, deposit growth, in terms of cost of funds, NPAs. I think perfect storm is space mein. So the space seems to be bottoming out in my view, and as and when the cycle turns, I don't know when it will turn. Will it take 2 quarters, 4 quarters, 8 quarters? Very hard to say, because we're talking at a very macroeconomic level turnaround here. So it may happen in 2 quarters, may happen in eight. Very hard to call out. But as and when it does, because the margin of safety that today these stocks are offering is so phenomenal, I would be absolutely delighted if, our audience evaluate some of these names and see if, it makes sense to them to invest. I know for a fact some of the NBFC MFI stocks which used to trade between 4 to 6 time book today are available between 1 to 1.5 time book, or some are even below 1 time book. So that clearly, offers a great margin of safety in my opinion. So that's the MFI and NBFC space. I think banks, PSUs, private banks results are broadly in line. No negative, no big positive surprises either. So that space sort of came in line with my expectations at least. On the auto ancillary space, I think most of the autos missed the volume growth that we were hoping that they would sort of report. Again, some of the unlisted players seem to be doing better there, but the listed guys sort of did not do as well as we were expecting. And I think the multiples still have some downside in the auto space. So I think we are selective on the auto space side. Auto ancillary, some of these stocks have started to become really, really interesting in terms of valuations. But again, the turnaround might take a bit of time. So it has to be patient capital that goes there. IT broadly in line. Some specific stocks did significantly better than others. Case in point, Coforge. Case in point, some other, Zensa Technologies kind of stocks did better than the rest of the pack. But broadly, I think IT, because of the Trump rhetoric, will remain vulnerable to more macroeconomic rattles rather than the business fundamentals at this point. Also, the entire AI, DeepSeek versus ChatGPT, all this will keep the IT space a little vulnerable to chatter around, what is the latest tech to work on. So I think the IT space at this point, barring the US dollar sort of getting stronger, I think nothing else is working for the IT space at this point. So a space that will be very, very extremely selective if we decide to invest in it at all. Within the healthcare universe, unbranded generics disappointed by and large. Case in point Natco, case in point other companies that are unbranded heavy. But a couple of unbranded generics did well. For case in point, Lupin did better than our expectations. On the branded generic side, broadly all results were in line, but a couple of misses like FDC missed our expectations because their US business export was really, really bad. It was half their normal run rate. On the diagnostic side, I think our expectations were broadly met. Krishna again disappointed on the top line growth, but bottom line growth was in line. Thyrocare was above our expectations. Um, on the hospital side, everything came in line with our expectation. I don't think we were positively or negatively surprised by anything that happened in the hospital space this quarter. On the API CDMO side, in line to better than expected numbers. Newland, we were expecting some volatility on the downside. That has played out. So at least our expectations were met in Newland as well. And same for a Heikel, for instance. But like a UPL or like other, other CDMO players like Jubilant Pharmova, they basically did in line with our expectations. No positive surprises per se. So that space, I feel still the valuations are slightly, lopsided for certain stocks, and I feel there is room for correction in the API CDMO space, given that the expectations from these stocks is very very high at this point. That's broadly my summary, Prince.
Thanks, Aditya. So let me see if there are some relevant questions to our coverage, and if there won't be any, then we can. And one more thing, Aditya, basically the challenge, obviously we have asked this question too many times, are we expecting any mutual fund or maybe small case wherein we can have all exposure? Because normally what happens with the retail, with the starting point or maybe a lower ticket size is we cannot have exposure to all the companies
I
as a
know.
basket, right? And in our limited capacity, whenever we try investing, there is a fair possibility we may end up investing in companies which may be, say, on a basket level on the lower side in returns, if not
Yeah.
business wise. So फिर वहां पे मोराल थोड़ा डाउन हो जाता है, तो इस केस में अभी मीनवाइल फिर कैसे उसको केटर करना चाहिए, आई मीन हाउ टू गो अबाउट इट.
That here I have to reserve my comments, Prince, because हमारी कंपनी में एटलीस्ट इंक्रेड में हम लोग स्मॉल केस नहीं कर सकते, गिवन दी रेगुलेशंस. दैट इज द कंक्लूजन आवर compliance team has achieved. And mutual fund platform हमारे पास है नहीं, so we have only the PMS AIF platform, both are which are, as you know, high ticket platforms. For the retail guys, I think the best way to do is mutual funds, but they may not give you the ideal exposure that you would want, because they tend to track the index a lot more than taking active risk, which is what I think today's retail investor is all about. The other alternative to that is obviously doing your own research and investing on your own.
Fair point, sir. So, on the hospital side, Aditya, you have been amongst the few people who, at the very beginning, when the cycle started for the sector, subsector, whatever you call. But at this point in time, do you believe on a basket level, the whole segment appears to be lucrative, or as you always say, you go about the individual
One
stocks?
is
So,
individual stocks, Prince. So let me give you some data points, right? Uh, Again, guys, I'm taking names, but these are just for illustration. These are not for buy or sell recommendations. So be very very clear to do your own diligence. Um, let's take an example of a Max Healthcare. So a Max Healthcare trades at 50 times EBITDA, some 100 times last year cash flow, FY24 cash flow. Right now, the company is a great company. The management is a great management, and they have one of the highest ARPOBs in the industry and one of the highest EBITDA margins of the industry. But at this valuation, if you buy the stock, will you be able to make money? I have my doubts. So we don't own it, right? At the same time, if you look at, let's say, a healthcare global, right? It's 22, 23 times cash flow. It's about 18 times EBITDA. And, a similar to, or better growth profile than a Max Healthcare, for instance. Then, the margin of safety is just significantly higher, and the chances of making money is probably significantly higher. So we own SCG, right, as a part of our portfolio. So that's how you look at things. I mean, it's very easy to get involved in the momentum or in the narratives. But if you look at valuations, look at data, and be patient with your capital, I think there's a lot of opportunities in the market today to make money, including that in the hospital space.
right, sir. One question is on the QSR space. So, Guna Shekhar is asking, Aditya Khemka sir is bullish on the QSR. Will budget really help this
Yeah.
space? Is this sector bottomed out? I mean, yeah, some
Yeah, yeah.
broad
So I
sense.
think, look, what the budget did basically was give some relief to the taxpayer, simply because consumption, was suffering for the last 3 years. And QSRs is basically driven by consumption spend, so it's discretionary consumption. So you eventually want, the average consumer to go out and eat out. That's when the QSR space starts reporting better numbers. Um, so from that standpoint, I think the budget helps. But again, within the QSR space, there are companies which are, in my mind, today not, providing you that kind of margin of safety. But some companies definitely are giving you a great margin of safety if you invest in them. And again, the way to approach is to look at, their EV and compare it to the operating cash flow that these companies generate. I think that is where you'll find your winners. So yeah, I mean, couple of QSR stocks are priced at a point where, it's probably a no-brainer to have those stocks in your portfolios. Like we own a couple of names in the QSR space where we feel they are no-brainers at today's price. But then there are few QSR players or food players which we feel are still priced to perfection. And even if the earnings were to turn around, the kind of returns that these stocks will generate for us would not be significant. So hence we are avoiding those stocks.
Right, sir. Although it has been pretty well covered, but in case some broad view on the agrochem space, Aditya, at this point in time, like lately, everyone has been expecting कि space में कुछ आएगा, but time and again थोड़ा बहुत कुछ ना कुछ आता रहता है. तो how exactly are things happening in the
Yeah,
agrochem
again,
space, per se?
बहुत heterogeneous space है. PI industries is completely different from a UPL, which is completely different from a Heikel. So problem क्या है ना कि one statement on the entire agri space will not do justice. But what I can tell you is that UPL is probably one of the companies that is present in majority of the agrichem spectrum. And UPL numbers this quarter were fantastic, and we have been saying that for the past 2-3 quarters, UPL probably has bottomed out. So I think operating performance of UPL was fantastic this quarter. And that tells me that the agrichem space has started to turn around. Now, PI is essentially has one large product for them which contributes significant portion of their earnings. So for PI, the numbers won't turn around till that large product turns around, which we don't know when it will turn around, if at all. Heikel has its own pesticide ka niche, so unless the pesticide space turns around, Heikel will have a challenge. So I think, broadly speaking, agri space has turned around already in the past quarter. That is what UPL numbers are suggesting to me. Whereas each of these smaller players, be it a PI, be it a Heikel, be it a Sharda Cropchem or, Excel Corp, uh, these guys will basically have their own time because they have their own niches in which they operate.
All right. One question is, sir, in situations when there is a supply overhang of promoter selling, there are many examples to that. But the company as a whole is doing good and earnings visibility is also strong. So in that case, what should be best on the part of the investors to do? Certain negative examples could be Usha Martin or Indigo, and this question is perhaps in context with Blue Jet, I think, where the promoter has to reduce the stake to say 75%.
No, so look, that is very different. So Usha Martin and all, where promoters are selling, they may be selling to deleverage their personal balance sheets. A Blue Jet they have to sell because there is a statutory requirement that they have to meet, that 75% promoter shareholding statutory requirement. So if it is statutory, then anyways that promoter selling is not does not mean anything about the business or the stock price, right? Because वो तो उसको करना ही पड़ेगा just to remain listed. Otherwise he will get penalized and SEBI will go after him. So they will have to, sort of do that. तो उसका कोई लिंक नहीं होता स्टॉक प्राइस या बिजनेस मोमेंटम से. But in other cases where the promoter might be selling, whereas they might be telling you that the business is doing great, there I think you need to then double check, whatever story or narrative is there around the business, whether it will actually play out, or is the stock just too hot, right? Sometimes the stock is just too hot. And despite the business growing at 20% CAGR, maybe the stock's implied growth is 30-40% CAGR in PAT. And if that is the case, then even if the business grows at 20% CAGR, you will still face losses because the stock's implied growth is significantly higher. So from that standpoint, I think, whenever you don't see a compulsion for the promoter to sell, yet he's selling while he's telling the world that his business is doing great, there you need to double check, whether the business is doing actually great or is it just temporary tailwind to the business, and whereas structurally they might have some headwinds ahead. So you sort of need to double check that at that point in time.
Right, sir. So, in case you wish to take, the question is on Windlass Biotech, if you cover that. So he's asking about your understanding of the recent developments in the business and also if you have gone through the con call. They are very discreet in giving guidance. How long can they have muted PAT despite revenue growth, as they have upfront depreciation and other OpEx costs due to new plant going live?
Yeah, so look, generally, again, this is not specific to Windlass. My comment is generally in terms of these asset-heavy businesses, right, which are contract manufacturers. In these businesses, when you build capacity, your stock suffers because initially when you build capacity, the cost comes on the P&L, the debt comes on the balance sheet, but the revenue comes later. But as and when the revenue comes, because your cost is already on the P&L, majority part of the revenue flows to the PBT. And similarly, once the cash flow comes, the debt gets repaid, so the balance sheet gets lighter. So your margins expand, your PAT expands, but your balance sheet gets lighter, so your ROE expands by a very significant number. So I think companies like Windlass or any other contract manufacturer which tends to be asset heavy, it's manufacturing operations. The best time to buy these stocks generally happen once they have expanded capacity. That's when their P&L and L and their balance sheet is at its worst. And as and when the revenue trickles, both of them tend to improve, and along with that, the multiples in the stock prices, everything improves. So I would be a believer in such stories rather than saying that there is there may not be an opportunity there.
Right, sir. So we have been discussing about narrative-driven things in the market. So obviously we cannot color one space with that, but the question is around water space. So do you believe it's more on the story side at this point in time? Because although the space is obviously everybody wants clean water, whatnot, blah blah. But on the top of that, the companies operating in, are we anywhere near to that point wherein business-wise these segments can do good? Is basically the question, sir.
No, I think, look, the opportunity size is too big. The TAM is too big, right? And there are obviously many, many, many players listed and unlisted, which are trying to tap the opportunity. The next war, they say, will be fought on water, not on oil or gold. So I think they're very, very clear that the opportunity, the target action market here is very, very big. But that's a separate issue, I feel. Uh, uh, some of the stocks in the water space in India, I think the valuations are, again, the entry point is just not right. Whereas the tech for water, again, depending on which company you look at, what platform you're looking at, the tech for water treatment or the tech for, water handling is not something which is solidified, right? There is everyday new innovations happening on that side. So I would not call these companies really robust at this point. So I would refrain from investing. It seems like more of a narrative driven valuation that these companies have rather than driven by cash flows.
Fair point, sir. And sir, on the ethanol space, companies across are posting not so good result. So in case you're tracking the space, I mean, anything materially changed, or I mean, how one should, from investing point of view, look at the
I
space?
don't have a very strong opinion on the ethanol businesses, Prince, so I would skip this.
Okay. And one question again, your wish, you
Sure.
wish to take or not. So, you have shared your thoughts on Lotus Labs previously as well. So the subtle question from one of the audiences, is there any change in that view, basis last 2 quarter result, or, when the views are more or less, the same which has been shared
I think,
previously?
again, I'm a stickler for entry point. I think Lotus Labs will show very significant growth in earnings in the next 2 to 3 years. But I'm also a believer that a lot of that growth is already in the price. So, in case they disappoint, because look, it's a real world, it's business. There are variables, there are things that will change over the course of a period. So, if things change for the worse, and if they fail to deliver on the growth that the stock is currently implying, then you may not make much money from the company, which is why, I continue to sit out the Lotus opportunity at this point.
Rahul is asking question. So Aditya, how you think the management is scaling up the business? He's asking about Max India.
Oh, no, they're doing extremely well. Again, Max India is a stock that we have spoken about in the past. I don't own it in my PMS. I have historically owned it in my personal account. So just a disclaimer, I may be biased. Uh, but I think they're doing a great job in terms of, how they are scaling up the verticals other than senior business saving, care at home, care homes, AGZ, all these platforms that they're incubating. I think these are becoming really good, businesses, viable businesses. It's obviously a very, very small company, so one has to be really patient, and tracking this kind of company on a quarterly basis will not do you any good, especially because it involves the real estate business, which is a senior living business. That is a real estate business, so it will have high volatility both in cash flow and profits, because it depends on when the inventory comes up for sale, when the inventory actually gets sold, and when the cash gets collected for sale. So, it's very, very, the real estate business, because of the RERA regulations, have become very, very complicated in terms of how they report and how they do accounting. So, for me, Max India is kind of a long-term call, which is why I don't have it in my fund, because I don't have the liberty of taking like a 10, 20-year view in the fund. I generally cater to 3 to 5 year views in my fund. But on the personal account side, this is something that a 10, 20-year view horizon guy can definitely look at.
Right. And Aditya, by basis your understanding of the past cycles, and obviously we as retail investors, or maybe perhaps a segment which has not seen much of these cycles, are always anxious what is going to happen next. But just to understand your, I'll make a segregation, like, is that we have come to a point wherein it's time to go all in, or it's more like a matlab, situation in the market wherein it would be good to go in a staggered manner is basically the question. So as to understand where you're reading, we are in the
Yeah,
cycle.
yeah. So look, market cycle wise, I think there is more to go. So if somebody is asking the question on the market side, I think I would deploy cash at this point, but I would not deploy all of the cash at this point. I would, keep buying in small quantities over the next 2 to 3 months, I guess. Maybe 3 months or 6 months down the road, I'll probably be completely deployed. But there are stocks which I think have already bottomed out, and they may fall another 10, 15%. Nobody will be able to time the bottom. But if I'm able to identify stocks or opportunities which I feel have bottomed out, I would go aggressively and allocate today. And whatever 10% potential hit there may come from that on that stock, that I will take it on my chin, because I would tell myself that I'm not great at timing, and nobody is actually great at timing the bottom on any stock.
But on a broader level, Aditya, these are the times wherein we can nimble the companies of our
Absolutely.
choices, where we have good
Yes.
conviction and without much hassle and moving the price
Indeed.
as well,
Indeed.
right? Right. So, Aditya, rest will keep for next session, because keep and the questions are more specific to the companies. But idea is to discuss business and understand the sentiment of the market, which you very well touched upon. But again, apart from that, anything to your mind which we didn't ask, or maybe you wish to share to our audience
No,
before
I think,
we
look,
close
for
for the day?
retail investors, other than direct equity, which we always keep discussing, guys, focus on asset allocation as well. At any point in time, have some debt in your fixed income in your portfolio, have some equity in your portfolio, have some gold in your portfolio, have some real estate in your portfolio. Uh, Asset allocation, I think, is the guru of all mantras. And I think an average retail investor today is far more involved in equity than they are involved in evaluating fixed income opportunities, or real estate opportunities, or gold opportunities. I think they are all viable asset classes. Yes, their returns do not look as good when you compare to equity, but because these asset classes probably aren't as volatile as equity, so they would obviously give you lower returns, but they also help you sort of balance your portfolio in times like these, where you don't see a 30% fall in your portfolio if your entire portfolio includes all the four asset classes other than just equity. So follow the mantra of asset allocation. Whenever you feel equities are becoming cheaper, become aggressive in allocating to equities. Whenever you feel equities are becoming expensive, start allocating more to other asset classes and taking away from equity. I think that's the only way to survive these long bull or bear cycles, and that's the only way to keep yourself liquid and happy over a longer period of time.
Right. And Aditya, one observation which I believe is happening in the market is, and would also appreciate your views, is like people have made crazy money in last 3, 4 years, if
Yeah.
we remove last 2 quarters to say. And what smart people are doing is like everybody was making money last 3, 4 years, but from here I think the market is not going to be that easy, is what the consensus is. And many people are doing, like, when previously they were doing DIY
Mm.
investing, or to say everything was moving, or maybe basis some
Mm.
advisories or not. They are pushing their money through smart fund managers. So do you see that trend happening in the, I mean, you since in is a fund manager. So is that happening? And I think that is the right thing to do at this point in time. Like some portion of the money which we have made in the past should be preserved by giving to the right people, right?
Absolutely. I think, look, that should have always been the case, right? As a retail investor, unless you are 100% occupied in investing as a business, right? Uh, you would miss things, you would not know things, you would probably not understand the logic of a few things. So some part of your capital needs to be given to professionals so that they can manage it for you. Yes, if you are an enthusiast, you can keep some part of your capital for yourself and try to sort of learn through the process of investing. Um, so that you become a better investor over a period of time. So yeah, this time is no different. If you feel that you're running out of ideas, if you feel that you're clueless as to where the market or where some of these stocks might go, let the professionals handle it यार. फीस उतना नहीं होता है, लोगों को लगता है फीस क्यों पे करूं, but yeah, 1%, 1.5% to pay, when you're looking at a 15-20% CAGR return, that number doesn't even figure in the scheme of things. So it's always good to pay professionals to do it for you, right? We don't build our own houses, we don't create our own TVs, or we don't create our own TV shows. Then why force yourself to create your own portfolio, right?
100%। एंड आदित्य, ऐसी ऐसी मार्केट में जो वॉलेटिलिटी है, तो ये आई बिलीव मतलब यू विल आल्सो अग्री टू दैट कि दीज आर द बेस्ट टाइम टू बिल्ड योर पोर्टफोलियो फॉर नेक्स्ट 3 to 5 years, राइट?
Absolutely.
इसमें मतलब फंड मैनेजर के एंड पे भी इतना डाइसी नहीं होता कि भाई मार्केट में यूफोरिया नहीं है और अपॉर्चुनिटीज भी बहुत ज्यादा है, तो डिप्लॉय करने को हमेशा
हाँ,
रहता है।
but होता उल्टा है, Prince. In real life, in markets like this, we get redemptions, we don't get inflows. And in peaks, we don't get redemptions, we get outflows. So we get inflows, as in people deploy more money at the peak. So I think that mentality needs to change. The recency bias that mentality sort of needs to change. When the stocks prices fall, when the indexes are falling, deploy. When everything is at an all-time high, you feel the world will give you another 40% return in 1 year. At that time, trim your position. Uh, i- Investing is very counterintuitive, Prince, and I think that is something that people need to agree and understand and submit to. कि ये complex है, ये counterintuitive है, right? So इसको best या तो मैं समझ जाऊं कि ये कैसे होता है, तो I can do it on your own, or else I will pay someone else to do it for me, right? So yes, if you
नहीं,
want to create,
100%। एंड आई sorry, I remember you always say for that reason client onboarding in itself is a very important task, and I totally agree ki taking the right client is something which is very essential, and that's the
yeah,
way
yeah,
you guys
absolutely.
do.
We are very picky about who
So,
we,
yeah.
take money from, because if they are not educated, they will actually, or if they are not been investors for a long time, they will actually create a problem for you rather than being an asset for you. Because they will come in at the peak, they will go out at the bottom, then they will sort of say that return nahi bana, kyun nahi bana, and all that. So, that has to be very, very clear.
Certainly. And thank you so much, Aditya, for taking out time on a Sunday afternoon. Always great listening to you and Sajal bhai, and you guys are kind enough to share your thoughts. And especially, you guys never miss on sharing your thoughts when there is anxiety or say some kind of pessimism in the market, because that is the right time wherein we should connect and educate our fellow audience investors, brothers, that structurally nothing has changed.